Welcome to another episode of Bulls, Bears, and Blockchain on Revolution Radio, making smarter financial decisions with your host, Rob Nelson, former Fox News host and anchor at Roundtable Media with his team of market masters, Mark Lepresti, Managing Director of Moneta Advisory Partners, co-founder of Battlefin, leading data platform, and a former institutional equities trader at Lehman Brothers, Alex Massioli, founder of Trade the Chain, former head of institutional prime brokerage at Bquant, John Nigerian, co-founder of Market Rebellion, former co-host of Halftime Report on CNBC, and co-founder of Option Monster and Trade Monster. Daily data insights and ticker updates direct from three of the world's top TradFi, legal, and crypto experts on Bulls, Bears, and Blockchain every Monday and Friday on all your favorite platforms. Let's get started.
Good morning, good afternoon, and good evening. Wherever you are, whatever time zone you're in, you're listening to Revolution Radio's Bulls, Bears, and Blockchain. I'm your host, Rob Nelson, and I've got my team of market masters, John Nigerian, Marc Lepresti, Alex Massioli, and special guest, Thomas A. of the Sevens Report with a global macroeconomic update. And John, you're joining us just for part of the show today because John's in Venice at Mardi Gras. Well, you're at Mardi Gras, Carnival. And we don't want to keep them from having too much fun over there. So, John, thanks for joining us from across the ocean. Mark, I want to start it out with you, and we'll do your three picks. But I want to ask you first, you make a good point on Monday mornings. People want to know what's going on. Where is the smart money watching this week?
Well, we've got a day off tomorrow, of course, with U.S. markets closed for President's Day. But then we have a pretty active week ahead of us in terms of economic data that traders and smart investors are going to be watching to get indications as to the direction of this economy, recession, inflation, things of that nature. Tuesday, we have existing home sales for January coming in, the real estate market, the impact of rising rates on the real estate market, although we're expecting the low rates in January to actually have had a positive impact as people look to refinance or even snap up a house while that temporarily low rate event happened in January. Wednesday, we're looking for the minutes of the Fed's last meeting to see if there's any other tidbits of wisdom we can read in those tea leaves in terms of the Fed's hawkish or dovish directionality. Not looking for a lot out of that. Thursday, we're looking for the U.S. GDP growth rate, the second estimate for the fourth quarter of last year, to see how rapidly or slowly the economy is growing or contracting. And then perhaps the most important number coming out this week is Friday, PCE, the Personal Consumption Expenditures Index, which many argue is one of the Fed's most important gauges of inflation. And that will be, of course, for the month of January of this year. How much are people spending? What are they spending it on? And how has that gone up or down over the prior month? So lots of important economic indicators coming out in the coming week, Rob.
And we're going to talk a little more about inflation a little farther in the show, Mark, because we got Thomas A. from the Sevens Report joining us on our Monday shows. But I quickly to you, Mark, the consumer spending numbers are hugely important, right? They tie both into inflation and into a lot of the stuff you track for how companies are doing.
Yeah, no doubt. I mean, as I said, it's one of the things that some economists and market watchers would argue is one of the primary metrics that's watched very carefully by Jay Powell and the Fed governors to determine what the directionality is in terms of inflation and the impact of rising rates on consumer spending and consumer consumption activity. Very important number.
Right. All right, you got three picks for us. Let's dive into them. What do you got?
Yeah, so I've got three. This is also, I should have mentioned, Rob, a very busy week as we continue through earnings season. So each of the three names that I'm going to talk about today are reporting earnings this week, kicking it off with Coinbase. COIN is the symbol. They're reporting on Tuesday, the 21st. Look, this is a stock, one of the most talked about names in the crypto space, arguably one of the best regulated exchanges here in the United States. The stock was pummeled during 2002. It's up 100% from where it started in the beginning of the year to about 69 of the high so far in 2023. Close on Friday, 62.20. We're going to be looking to see if Coinbase can beat analyst expectations for its Q4 2022 earnings as traders look to Coinbase as a sort of flight to quality, something we talk a lot about with Alex in the continued wake of Coinbase and SEC action and crackdowns on enterprises like Kraken and others, particularly with mixed signals from price targets from both JP Morgan and Davidson just in the past week being cut for the year down to around $52. So we're going to be watching very carefully to see how Coinbase reports when they do on Tuesday. Lucid Motors reports on Wednesday. We are looking for Lucid to meet or exceed expectations of analysts. And so we are bullish on this name. Lucid, of course, manufactured almost 3,500 cars in Q4 of 22, which was a 53 year-over-quarter% increase. It surpassed the company surpassed its own 2022 overall manufacturing output target of between 6,000 and 7,000 vehicles. So really robust. Customer demand for Lucid remains robust and seemed to have increased in Q4. One of the things that we look at from the data side, Rob, is what is the status of customer orders? Are they increasing or decreasing? Because those orders, of course, can be canceled, like subscriptions to Netflix or Hulu. So we are looking for this name actually to meet or exceed analyst expectations when it reports on Friday. The stock closed, when the stock reports on Tuesday, the stock closed this past Friday, the 17th, at $10.93. Pretty low in the 52-week range for that name of $6.09 to $29 a share. And then the last one is bookings.com, which reports earnings on Thursday. We are bullish on this name as well. Rob, this is a continuation of our thesis of strength in the travel section. Of course, having that fantastic result from Airbnb's earnings this past week, which we called on the Monday morning show 1 week ago. We are looking for bookings.com to report fourth quarter 22 earnings around $21 a share, which would represent a year-over-year change of about 33% to the upside. On revenues, we are expecting bookings to come in just under $4 billion. And on the revenue side, that would be a 30% year-over-year increase. This is a name that has beat analyst expectations each of the 4 previous quarters in which it has reported. So we think it's going to beat again. And, one thing that made us bullish on this name, Rob, was Marriott. Marriott reporting strong earnings and the stock going up last week after it reported on indication of continued demand for consumer travel and business travel and hotel rooms. So that's bookings.com. That's our third name for the week.
Great, Mark. You got Coinbase, Lucid Motors, and bookings.com. And again, for our listeners out there on our Monday show, we run through 3 stock picks, 3 option picks, and 3 crypto picks. And for me, it's always listening between the line, guys, because these guys always tell you why they're picking it and the underlying stuff that matters. Alex, before you give us your picks, you want to just reflect on Mark's Coinbase pick for a sec?
Yeah, a couple interesting things that you discussed with Mark that I want to reflect on. The new home sales indicator is a great macro indicator to the overall health of the economy. And I just wanted to throw in crypto. The crypto market follows that, keeps an eye on that, as well as obviously the FOMC minutes. We hope that the last couple of times FOMC has kind of been baked into the market, so it's been really a little bit of a nothing burger. But between that, PPI, CPI, those are all things that we follow very, very closely. Curious about the Coinbase pick. I tend to agree with Mark. Coinbase has been out of vogue for a long time as an equity since it drastically dropped from its IPO and made Cathie Wood kind of look a little precarious, but I'm curious to see on how the fallout is from the Kraken debacle that we discussed at much length. and if there's anything relevant that investors should know about Coinbase. Another one that I'm real curious about, and I don't know if I'm going to go to Mark on this real quick about his pick. I love the fact he picked Lucid. I'm curious on if Lucid, is going to be able to scale the demand if it heightens over the next, 4 to 6 quarters. I'm also very curious on how their post-sale support is compared to the likes of a Tesla, which seem to have a showroom in every mall now. So that's kind of my overview from the Mark segment.
Cool. Well, let's take 30 seconds, Mark, just 30 seconds if you want to respond to that. And maybe throw in also, does it matter that Tesla is now going to lease out its charging stations? So, that benefit of Tesla, you got your own charging network. Suddenly, now everybody else got it too. So get in line.
Yeah, listen, another smart move out of Tesla. We remain long Tesla. We remain fairly bullish on Tesla. I think the technicals indicate that it still has some room to run. And yeah, by the way, I mean, I completely agree with Alex's assessment, particularly on Coinbase. Coinbase was, it was a pick of one to watch this week, not necessarily a bull pick, but just one that, because of its importance to the overall indication of where the crypto economy and the crypto industry is, we're going to be watching that very carefully. I actually suspect that the stock will do well. So maybe I'm a whisper bull on Coinbase because I think they are sort of becoming, from a regulatory perspective here in the U.S., the only game in town. Particularly, I think they benefit as all of this regulatory crackdown continues on the less regulated actors. Lucid, go ahead, Rob.
No, I was going to go ahead. Finish your thought.
Lucid, I think they are doing a pretty good job of the post-sale customer service follow-on. That's one of the big things that people placing new orders or first-time order placers or customers look to see. How satisfied are the customers that have already purchased? I think you'll see, like in Short Hills Mall, not far away from me here in New Jersey, Alex, Lucid has their own showroom set up, about a pitching wedge away from the Tesla showroom. So they're starting to catch up. I was dubious on this name if you went back, 3 quarters, certainly a year or so ago, but they seem to be doing pretty well. My big bull pick for this week is, and that's also going to be put my money where my mouth is, pick, Rob, is bookings.com.
Well, he gave it away. He gives it away before we get to the end. Jeez, talk about not saving it. All right.
You could edit that out in post.
Alex, no, it's all real. Alex, what is your big insights on the crypto market for this week and your big picks? What are your whispering bulls?
I got a bunch of stats here. I'm going to do rapid fire so I don't waste anybody's time. Crypto total market cap today, 1.1 trillion, total trading volume, 54 billion. We're sitting about an average number there. It's always light on the weekends typically. Bitcoin's sitting around 24,550. It's about even for the day. Its sentiment is dead on neutral on the Trade the Chain dashboards. ETH at 1685, also even on the day, following exactly along the lines of Bitcoin. Sentiment 58 out of 100. I got three standouts for the folks today. One, Filecoin, ticker's FIL, up 12% on the 24-hour, up 68% on the week. It's 1.64 billion in trading volume, up 430% versus average. Tweet volume up a whopping 259% versus average. If you don't know what Filecoin is, Anthony Scaramucci brought it up on our show this past week. It is a decentralized storage system and an incentive layer for IPFS, Interplanetary File System. Number 2, Internet Computer, ticker ICP, up only 3% on the day, but 31% on the week, with a high daily sentiment of 83 out of 100. Now, like Filecoin, ICP's goal is end-to-end decentralization, but in computing, such as the elimination of the cloud. ICP up 244% versus average in trading volume. This is one where I observed the Trade the Chain sentiment rise, got in, beating the upward price action, and took some alpha. Third one, Blur, ticker BLUR. This is a relatively new one. This is one of my NFT space bets. Blur is the native governance token of Blur, an NFT marketplace and aggregator platform, but with advanced and unique features such as real-time pricing feeds, which is really unique, portfolio management, and multi-marketplace NFT comparisons, which is very, very unique. It launched in October, so it's really new. And it has some high-profile investors such as Paradigm. Right now, it's sitting at about $1.28, up 8% for the day on 630 million in trading volume. It is already ranked number 85 by market cap.
Good stuff, man. Alex does that like rapid fire. If you're not paying attention, you miss all the action in between. Alex, quick question for you on Blur. Is Blur technically considered an NFT marketplace?
It is much like one inch, even though it's an aggregator of dexes, is considered a decentralized exchange. So in my book, I place its pronoun as an NFT marketplace.
Is that going to be a big space as we're moving into it? I mean, there's so many little marketplaces out there. Is there going to be are we going to see some kind of a competition and then ultimately a couple giants will emerge?
I think you're going to see more aggregation like what Blur's trying to do, right? So we have OpenSea, which everybody knows. You have Nifty Marketplace, which is a Winklevi zone. Nobody really, if you're out of touch, you don't know what that is. I think you're going to see a lot of aggregation, so you'll get to know more and more names and choices to buy, sell, and trade.
Awesome. Good stuff. All right, John, again, thanks for being with us far away. And we're going to only have you on for a few minutes here because we want to let you get back to your festivities. You know, can't stop the party from happening. But good to see you from far away. And what are your 3 option picks for the day?
Let's talk about what we see as far as unusual activity. And the first one will be Chemco, CCJ. So, Rob, what I'm seeing is that they're buying 10,000 of the 31 strike calls. That's what the stock closing at 28 and change on Friday, the 17th, the last trading day of last week. We, of course, won't be open till Tuesday, but nonetheless, that is the first and the first one that I'm going to use for unusual activity of the bullish kind today. The second one will be Lithium America, LAC. Lithium America, Rob, I'm seeing unusual activity in the March puts. Now, we had QuantumScape, which made a nice jump for us last week, and then sold off and gave nearly all of it back. But if you're disciplined, which I always preach, I think all of us do, Mark, Alex, and I always preach, hey, be disciplined about it, folks. And those that were, they were richly rewarded. So remember, March 2250 puts with the stock trading at 2364. That is the second of my unusual activities for this coming week. March 2250s in LAC, that's Lithium America. Bang. My third and final for my pick this coming week. Again, we're not trading Monday, folks, so be aware. But when we start trading again Tuesday, I will be adding to an already long position in TLT. This is a bond ETF. So these particular calls, when they go up, rates are going down. Somebody bet pretty big. 15,400 of the March 103 calls were bought. That was with the TLT at 102. So look for a move higher, which would mean rates lower. And I got to think the market would like that. We'll see if that plays out for March. That's the third Friday in March, 103 calls with the stock TLT at 102 and 13 cents. Wish I was there with you guys, but I also wish you were here, and I'm sure you do too. Fabulous time over here in Italy, doing a little skiing again tomorrow and the next 3 days. I'll see you guys soon on another Revolution Radio broadcast. Bang.
Okay, great. Good stuff. All right, go enjoy. The rest of us will stay here and, live our normal average lives. Alex living high on the beach in Puerto Rico and Mark jet setting somewhere. Tom, thanks for joining us. Tom, let's say with the Sevens report, a global macroeconomic report that every day gives you 7 key things to look at. And our show on Bulls, Bears, and Blockchain, Tom comes on Mondays and gives us 3. What do you got for us, Tom?
Hey guys, I hope everybody's enjoying the long weekend, especially John over there. Enjoying Mardi Gras. I'm stuck chasing around small kids, but that's all right. That's a different kind of fun. But it's going to be a pretty busy week, and the reason is because last week, two of the main reasons stocks rallied so far this year got challenged, and that's why stocks declined. The two biggest reasons stocks have declined stocks have rallied from a macro standpoint so far this year are number one, disinflation, which is a continued decline in inflation. And number two, the idea that the Fed is almost done hiking rates. CPI and PPI, which are two very important inflation indicators that both were released last week, basically refuted both of those ideas. CPI and PPI were higher than expectations, and it implied that maybe disinflation isn't happening as much as we had hoped. And as a result, we saw market expectations of Fed rate hikes go up for the first time in a long time. And that's why stocks dropped last week. And it's also why bonds dropped last week. The back half of last week maybe reminded some people of 2022, just in not as a sort of a violent fashion. And that's the reason, right? As the market began to price in, oh no, maybe they're not done.
Good. It's great. Go to number two for us, Tom, but we're going to come back to that inflation thing when you're done with your two and have a bigger combo.
Sure. So the key for this week from a data standpoint is, does the data further attack these two reasons we've rallied, right? So there are three numbers I want everybody to watch. The first is the flash PMIs. They come out on Tuesday. They're the first national, really widely followed economic number of every month. And this is going to give us March data. And markets are going to want to see the price indices go down and the headline indices stay flat. And that will help stocks bounce back. Second number was mentioned earlier by Mark. It's the core PCE price index, comes out Friday. It's the Fed's preferred measure of inflation. And markets will want to see that be better than expectations. If it's not, it's just going to add to this sort of sudden angst, right? That maybe inflation isn't falling as much as we thought. And then the final one is the FOMC minutes. I mean, here's a good way to explain this. By the end of last week, the market was pricing in a greater than 50% probability that we were going to get another rate hike in June, 25 basis points. 3 weeks ago, that probability was 0%, basically. Okay, so we've seen quite a big move. The FOMC minutes, markets will be looking for clues to see if the Fed really is as close to done as possible. And that's really what's going to move markets this week.
So let's pick up on that, whether the Fed is really close to being done. You know, we had Anthony Scaramucci on the show at the end of last week. And one of the things that stuck out to me is when he said the break-even number on Treasury, 10-year Treasuries is a number to look at. And, you know, and again, for those who don't know, that's basically what the market's suggesting inflation is going to be at an average of over 10 years. So it's down from 3.1% last year to 2.33. And he made the point, Scaramucci made the point that it keeps trending downward, which is a warning light to the Fed, who may not want to see a deflationary spiral. And also, FYI, that they want to use inflation to some extent to monetize some of the massive deficits. So given that as a framework for you guys, and I'll start with you, Tom, but then everybody jump in, you know, how important is that? And what is your take on it? I mean, the argument is the Fed maybe really isn't done. Is that what you think?
Yeah, so this is sort of the story, and what Anthony was talking about last week is really super important, because the bond market, the entirety of the bond market, if you look across the yield curve, is screaming at the top of its lungs that we are headed for a really bad recession. 10s minus 2s, which is a yield curve a spread that we watch, is inverted. That usually signals a recession is coming. It's the most inverted anyone's seen it since the early 80s, right? And we can remember what happened then. Every spread across the yield curve that anybody watches is inverted, which I have never seen in my career ever. And that's, again, signaling that there's a recession potential, that the bond market thinks there's a recession coming. And then finally, Anthony's absolutely right. These break-evens are the long-term expectations for inflation. They are going down. That tells you the market thinks that growth and inflation is going to decline. So the bond market is telling the Fed, you've already gone too far. And if you keep going, you're gonna create deflation. The Fed is ignoring it. And in my estimation, or well, not my estimation, in my experience, I've been through this twice. The bond market was right both times. And that is really at the core of why I'm probably a bit more cautious from a macro standpoint than other people on the street. But this is the story: is why is the bond market screaming recession and the Fed has already gone too far, and the Fed is essentially ignoring it.
And Mark, what's your take on why? You've talked about this a bunch because you think the Fed is missing the boat a little bit. But why is the Fed going to continue to ignore it? Because obviously the market clearly, the market's saying that the Fed's not responding. is it just because they want what are they ultimately scared of? They're not stupid people.
Well, listen, Rob, the bond market is certainly sending a clear signal to the equities market and to the Fed that we're already in a recession, and continued aggressive hawkishness on the part of the Fed could lead to stagflation. But the problem is, if we've talked about on this show and others, the Fed does not use indicators that are current. The Fed uses indicators that are lagging, sometimes by as much as a quarter. And that is fundamentally problematic, particularly in a world where professional traders and smart money are using alternative data that we talk about all the time that gives real-time indications of the status of consumers, the economy, lending, and all of the things that the Fed, and employment, by the way, all of the things that the Fed should be looking at. So the Fed should definitely be including the bond market signals into its overall consideration, but it just doesn't, in my estimation.
So is your gut to agree with Tom that the Fed is going to keep reacting, and the markets are then going to react to that?
Well, look, I don't think that there's, and this is another thing that frustrates me, there's not much magic in trying to determine how far the Fed's going to go. The Fed has told us explicitly, right? They want to get to that 2% number. And so the question is, what's it going to take to get there? So I think we're going to see a rising rate environment. The Fed is not going to take its foot off the gas, I think, this year. So I don't think there's a whole lot of mystery to that. Unfortunately, I don't think it's the right and the correct monetary policy.
So Alex, and you come out of a TradFi background, but I want to tie this into crypto in the sense of big picture. And I got a secondary crypto thing I want to ask you about, but big picture. Does the crypto market, you talked about indexes that crypto looks at, same as in TradFi. Does this have a different impact on if you're buying Ethereum or Bitcoin when you're looking at what the Fed's doing and how the bond markets are reacting? Do you have a split strategy?
Well, I mean, we break it up into two different, which is short-term, long-term. And the short-term is PPI, CPI, and FOMC, both of what Tom and Mark have mentioned on today's show. Those are, next to our counterparties in TradFi, we're there ahead of the print, trying to guess which direction it's going to go, trying to, scrape some alpha off the table and make some money. When it comes to things like, the bond market, new home sales, the 2-year, the 10-year, those are things we look at for the macro long view. Exactly what Tom is brilliantly conveying in his report, albeit scaring the crap out of me, because I'm torn right now. My mind, my happiness wants to believe that we're recovering, but all the other data, including what Tom has mentioned and what Mark is talking about, and what we're publicly hearing from the likes of J-Pow and everybody else, is that we are going to go deeper down this rabbit hole. I want to rebuild in my head. I want to go up, but deep down, the conviction is starting to sway towards the bears. And one thing I learned when I first started, speaking and walking on my own and all that stuff is the bond market, more likely than not, always tells the truth out of everything. So Tom is spot on there.
You made the point, Tom, that you said it's like screaming as loud as it can in every direction, louder than you've ever heard.
Yeah, absolutely. And I mean, again, this is sort of, it's to a point, the mystery of 2022 and 2023. Why are these two things at odds? But then, I think back to, 2000, for those of us, I think all of us were in the business then. And then obviously to, 08, 07, 08, 09. It really wasn't that different. It's just the signal wasn't as loud. And Alex, thank you very much for your compliments. And I hope I'm not scaring anybody, but it is scary is the problem, because if the bond market is right, and I've never seen it wrong, at least that I can remember in a call like this, then we are headed for a real serious slowdown. And I own stocks, I'm invested. I don't want to see it, but you got to look at what the market's telling you, not what you hope happens.
Got to look at the facts. Putting your head in the sand doesn't help, which brings me to my last thing before put your money where your mouth is. I want to play a clip of what Anthony Scaramucci said when we were talking about crypto and regulation in the U.S.?
We believe the rumors are out there, but I'm pretty confident that this rumor is true, that by June 1st, the Hong Kong government is opening in the cryptocurrency space, going to allow for trading, mining, staking, some of the things that Gary Gensler doesn't want to have happen in the world's largest economy is about to happen in the world's second largest economy.
Alex, to you, especially based on what Tom's saying, like the bond market's screaming, we may be headed for some rough stuff. If China jumps on and makes, crypto trading, mining, staking, as we're going the other direction, that is bad news for the U.S. I believe not just for U.S. investors in the crypto space, but for the U.S. economy.
Yeah, I agree. Hey, listen, Bitcoin is it's not too big to fail, it's too big to kill. And so it's not going anywhere. The thing is that the crypto market isn't an 800-pound gorilla like the stocks and bond market. And for that reason, we're always going to be the follower to those leading markets. Hong Kong, these rumors have been around now 3-4 weeks or so, since mid-January. If that happens, one, I got a couple of questions. How does the China-Hong Kong delineation work on regulation? And maybe Mark knows more about this than others. And two, if that is the case, then I may uproot my broadcasting from the Caribbean and be coming in from Hong Kong next, because like many folks are starting to do, regulatory arbitrage, just like the exchanges did from 2017 to 2020. You got to go where the favorable environment is. And in this case, we're just playing musical chairs.
What do you think about that, Mark? I mean, both what he's saying, both about the Hong Kong thing, but the regulatory arbitrage idea. Wow. And it is an interesting thing how Hong Kong, now under the sort of extra grip of China, anything Hong Kong does is essentially China's doing.
Yeah, which is why I don't trust any of it, and I would not be uprooting myself to play regulatory arbitrage, because the only reason that the Chinese government is embracing cryptocurrency is so they can regulate and control it. Because the greatest way to control your citizenry is through the media, of course, but even better than that is through control of the currency. That's why China was the first to announce a central bank sovereign currency. So none of this is terribly surprising. And as far as the regulatory arbitrage is concerned, that's been a thing in crypto for ages now, right? I mean, I remember being in Zug in 2014, 2015, when they were starting what would become the Swiss crypto valley there. So that was a success and remains a success. And there are a lot of companies that are not native Swiss that are operating there, because that is a country with regulatory clarity, with guidance, with a framework for registration, what type of licenses you need for what kind of business you're engaged in, whether it's trading, custody, asset management, or some form on the execution business, all talking, again, of course, about crypto. So, the SEC's current rampage is only going to drive further regulatory arbitrage. It's funny. There was I think it was a Business Insider article that came out on Thursday or Friday that talked about the popularity of golden passports, and that this is at an all-time high. Americans seeking and getting golden passports from any number of jurisdictions, places like Dubai and Antigua, the Bahamas, et cetera, where if you invest a certain amount of money, typically $250,000 minimum, some jurisdictions are more, you can actually get citizenry there. And some people start with the golden passport, keeping U.S. citizenship, with a plan to ultimately drop U.S. citizenship. And that is all driven by the current belief system of being the current belief about this administration and possibly another Democratic-led administration that's very pro-taxes, anti-business, regulate through enforcement, and a very poor environment for entrepreneurialism. Mm-hmm. I think it's all tied together.
It's going to be interesting in the next election, especially if a Republican wins the presidency, because Gary Gensler will certainly be on his way out if that happens. But in the meantime, it is unquestionably, it's amazing how powerful one person who's a regulator who's not elected can be. It constantly shocks me how influential and how much impact that one person can have. I mean, the SEC as a whole, a couple people, but in particular, the person in charge. Time flies with you guys. Let's do our $1,000 put your money where your mouth is. You guys are all doing great. Just going to do a quick highlight here. John, John's gone. John went with an option of 90. He did a 90 put on the 24th of February, a 90 put option on IYR, and it was 32% up week to date on the put, which was really a good outcome for him. So awesome job. Mark, you went with Airbnb. You admitted you sold on Thursday, but you sold for a 30% profit, which is impressive, and you knew when to take some money off the table. And Alex, you went with ETH, which also was up 13%. I think that was as of the close of business on Friday, because obviously it doesn't stop with crypto. So overall, you guys, the B3 index up 25.4% as a blended return of all of you for the week, which is pretty awesome. You guys are picking good. And now you get your new picks. Mark, good call on Airbnb. And why did you get out on Thursday?
We just listen, when you're up 28 to 30% in a trade, I don't care what it is, you have to take profit. You must take profit. You know, pigs get slaughtered all the time. And just looking at the technicals, looking at the charts, how far it had run up. And of course, we did see profit taking and a little bit of a sell off of the stock on Friday. Sell off, it's still up 23%. But we just thought it was time based on all of the indicators and the things that we look at.
Okay. And what's your this week pick that you'd put $1,000? And by the way, you guys overall have been doing great since we started this, a month ago. Everybody's doing awesome.
Well, listen, I try to always make it one of my three stocks to watch, right? So people have a little bit more detail on why I have a bullish as much sentiment to make it my money where your mouth is pick. But I am sticking with the strength in travel. We have another big name in travel, as I mentioned before, Booking.com, BKNG. They're announcing on the 23rd on Thursday. We're looking for them to beat expectations. We're looking for $21 a share on $4 billion of revenue. That's 30% up year over year. This is a name that beats every quarter for the past 4 quarters in a row. Bookings.com has exceeded analyst expectations. That's a metric we like. And again, we love the tea leaves that we've seen from the data, Rob, but also other names in the travel industry like Marriott last week, giving us an indication that this is another name like Airbnb that should benefit handsomely from the continued demand in consumer travel, certainly through the fourth quarter of last year.
Yeah, people are traveling. People are not staying home. Alex, what do you got as a crypto pick? Oh, it doesn't have to be a crypto pick. Sorry, Alex, what do you got as a pick?
Well, first of all, I just want to give Mark props because Bookings.com is going to, I think, blow away the market. You're seeing low-cost budget airlines adding tremendous amounts of routes. A lot of people traveling now that, we're back to full throttle here. Mark's just got this down pat. My pick is going to be a crypto pick this week. I did look over my favorites in traditional equities, but I'm sticking with Blur, ticker BLUR. You heard me cover it earlier. It's my NFT bet. It's young. It's gaining momentum right now. It's the one where I'm going to put my money where my mouth is.
I like it. You're both picking things you sort of had up above and sticking with it on the long haul. Blur and Booking.com. We're gonna get John's pick since he left us earlier in the show. We're gonna get John's pick and we'll put it up on the website and talk about what it was on Monday. You can go to see all their picks, track all of it, both their put your money where your mouth picks are, as well as the 3 pick stock option and crypto that they go through at the top of every Monday show at revolutionradio.io. And you can follow us at Rev Radio on Twitter. You guys, great show. Awesome. Fun to be with you on a Sunday. Thanks for taking time. Monday's a holiday, so markets are closed, except not in crypto. So we'll see what happens there. Tom, thanks for joining us as well. Have a good day, you guys.
Today's episode of Bulls, Bears, and Blockchain is proudly brought to you by Verijet, the only solution for short-haul private aviation. To learn more, go to verijet.com, and we'll see you in the clouds.
Thanks for joining Rob Nelson, Alex Massioli, Mark Lepresti, and John Nigerian with another great episode of Bulls, Bears, and Blockchain, twice a week on Revolution Radio. Whether you're new to the world of Web3 finance or an experienced investor, we've got you covered. Follow us on Twitter at GetRevRadio and visit our website at revolutionradio.io, helping you make smarter financial decisions.